I think people should look, when they look at AI, try to find companies that actually fundamentally benefit from AI and focus less on what the top companies in the index are.
We're hearing more and more about breadth of the market, and we understand that the idea behind that these seven stocks and these seven pillars shouldn't be supporting the entire market. Now, the bulls are saying that the rest of those will actually catch up to the ones that we have, and then some people are saying that those seven, probably due to multiple compression, will probably come in and hurt the index, and that's going to hurt all the smaller companies even more. But then we have AI thrown in, which makes everything confusing. What are your thoughts both on the actual breadth of the market issue? Do you have any thoughts?
Yeah, so I have several charts that I could find, but one of the
Yeah, and
more
we'll throw those up there right now for those of you in post-production. So if you have those to send over, please. Yeah.
yeah, we'll do. But breadth right now is actually the worst that we've seen since 2005.
Mm-hmm.
We have seen a rotation into small caps over the past, I would say, 5 or 6 market days, which is a healthy development for sure. However, breadth and aggregate is about as bad as it's ever been.
Okay. And what about you, Austin? What do you think on this topic?
Yeah, I think breadth is definitely an issue. And AI and breadth, I think, are different issues in the market today because AI didn't become as much of a buzzword until kind of halfway through last quarter. It became a big deal towards the end of last month as NVIDIA came out with some really bullish kind of fundamental drivers for their business, and people started to realize that that was rolling through the market. Not all of the seven are actually AI plays. And in some cases, they might say a lot about AI, but AI is actually hurting fundamentals as they're investing a lot of money to try to get up to speed. However, the margins are much worse on that business that's growing quickly. So it's a bit of people need to differentiate a little bit beyond like, hey, these seven companies are going to drive kind of market gains forever, and what is AI? Benefit from AI, and focus less on what the top companies in the index are. One of the things we've seen a lot of more recently, as you've seen these seven companies become big drivers, and Byron kind of alluded to this with what we saw last year, is you see the names that are driving returns on the way up also driving returns on the way down, and many supposed active managers are holding significant weights in these names because they feel that's the best way for them to perform with the index or outperform the index in the short term. However, last year we saw a number of those investors also underperformed in the short term when the market went down. So it's kind of a unique time right now because you can identify which active managers are essentially just playing the short-term game, trying to keep up with the market by owning a couple of like names that seem to have a lot of momentum behind them, rather than owning, names that people feel are going to be good investments for the longer term. But I think it's really important for people in thinking about the, I guess, Magnificent Seven is what they're calling them today. Thinking about the Magnificent Seven versus AI and what are the true drivers of AI. It could be a trend that lasts for quite a while, but if you want to play that, you should own the companies that fundamentally benefit from AI, not just get excited about the hype that's going into, whatever it be, a conference call or whatever. So it requires some digging into fundamentals and figuring out what's really going on underneath the hood.
Hey, thanks for watching The Merge. We've got a ton more stuff for you to watch on YouTube, on Instagram, on TikTok, everywhere. Check us out.